सभी साथियों को प्यार भरा नमस्कार। In this video we will be discussing about issue of debentures other than cash. In the earlier videos we have gone through the concept how to issue debentures against cash. But this video we will be discussing about debentures issuing other than cash. That means you are issuing debentures but you are not receiving any cash or check. So what may be the cases? You see from the left side, issue to promoters. So there first we need to understand what is a promoter. So promoter are basically those individuals or person who controls the activities or affairs of the company in the form of shareholders, directors or otherwise. If I talk about the role, what promoters do, so the thing, they come up with an idea of forming a company and arrange the finance accordingly or evaluate the market size. So basically they are those people who actually give the birth to any company. They come up with the idea of forming a company and evaluate the market size accordingly. So if we issue debentures to promoters, so what entries to be passed? Incorporation expenses account debited to whatever the rate of percent of debentures. And in your narration you have to write being debentures issued against incorporation expenses. So incorporation expenses means the initial expenses of formation, initial expenses behind the formation of a company. Since expenses accounts are debited being a nominal account, therefore incorporation expenses account debited to whatever the percent given in the question, that percent has to be specifically mentioned there, followed by debentures account. Then second, issue of debentures to vendors. Now the vendors, when you sell or purchase assets from any enterprises, they are called vendors. So when assets are purchased and debentures issued, in that case what entry is required to be passed? So when assets are purchased, so sundry assets account will be debited to vendors account. You have to write the name of that person, that enterprise from where you have purchased the asset. Sundry assets debited to vendors account. Now when business is purchased and debentures issued, here you have to understand a thing. Business is purchased. When I speak about purchasing a business, that means I am taking the assets and the liabilities of the concerned business. That means it means assets and liabilities are taken over. Okay. So in that case a new concept arises, that is called purchase consideration. So what is the purchase consideration? This is the amount which is agreed to be paid for taking over the business from another enterprise. I would repeat here, purchase consideration is the amount which is agreed between, to be paid for taking over the business of the another enterprise. Alright, so there can be three cases, as you can see here, case 1, case 2 and case 3. What purchase consideration has to be paid? Sometimes it becomes equal to the value of assets taken minus liabilities assumed. Second case speaks about when your purchase consideration is more than the assets minus liabilities. And the third case, when your purchase consideration is less than your assets minus liabilities. In all the three cases you see here, assets taken minus liabilities assumed will be same, because you are purchasing a business. Alright, so for purchasing a business there is a certain agreement of price to be paid by one enterprise to another enterprise. Okay, so that amount which agreed to be paid is called purchase consideration. So the purchase consideration has got three cases. Sometimes it is equivalent to the value of assets taken minus liabilities. Sometimes, as per the case 2, it can be more than assets minus liability, and in the third case, as you can see, it may be less than assets minus liability. So this is the basics about issue of debentures other than cash.